Joe Brown. All right, housing affordability is on everybody's minds right now, so we're going to get some information from Jim Bottrell, Bottrell Real Estate Group. So we've got now Donald Trump, President Trump, is talking about a 50-year mortgage.
Yeah, a 50-year mortgage. The way people qualify for loans is they're based on the percentage of their payment the payment as a percentage of their gross monthly income. The 50-year mortgage will allow that payment to be a little bit lower. So easiest way to do it is just, and it's an option. It's not, we're not getting rid of the 30 and going to the 50, so it's an option. So think of these two scenarios. You're a buyer, you find your dream home, you love your dream home, and the lender comes back and says, I'm sorry, we can't qualify you. The payment for this is too high as a percentage of your gross monthly income. You can't get the house. But we do have a 50-year mortgage where we can qualify you, so welcome home.
Okay. So how long is that's a long time. I mean,
yeah. Well, I mean, people
is that going to be something where you could get into the home with a 50-year mortgage and then, like we always talk about, do the refi down the road?
Or you don't have to refi. I mean, that's the advantage of it, is that when you wouldn't normally be able to buy a home, you can now. And then if you ever want to make that a 30-year loan, you don't have to go refi. There's no prepayment penalties. Those are illegal. So you just pay an extra couple $100 on your mortgage, and now you got a 30-year loan. So it's fantastic. There's all these people out there saying that, oh, this is awful, the world is ending, you're going to pay almost double the amount of interest, except you're not. Because the average homeowner only keeps their home for 12.3 years in the United States. And they refi twice inside that. So the average person only keeps their loan for 4 years. So it's absolutely irrelevant whether you get a 30-year or a 50-year. The 50-year just allows you to get the house.
Okay.
Yeah.
It's a way to get in.
Yes, it's a fantastic idea. Yeah. I don't understand.
But you don't want to hang on to it. I mean,
why would you?
Long term.
I mean, nobody takes a loan to 30 years, much less 50.
Yeah.
Right? They just don't.
Okay. We got advantages, disadvantages. Portable
loans.
Portable loans. That's what we're doing.
All right. So this will be awesome if we can pull it off. So the issue is that people are what we call mortgage locked. They've got their anybody who owned a home prior to 2021 has a 2.5% interest rate. I mean, they just do. And they are mortgage locked. They are not selling. There's 3 sets of bunk beds inside one room, 5 kids sharing a bathroom, or on the other side, you have the older people that are sleeping on their couch because they can't go upstairs, but nobody is selling their house because they have a 2.5% mortgage, right? Now, those houses, there's people who need those houses. There's growing families who need the extra bedrooms, or there's starter families that need that first house where you've got all the bunk beds. All right, so what the administration has come up with is a possibility of making your loan portable. So you currently have your 2.5% interest on your home that doesn't fit your needs. Remember, I used to love my home, but now I love my interest rate. So you've got your 2.5% mortgage on a house that doesn't fit your needs. They're saying they're going to make it legal for you to pick that mortgage up and drop it to another house. And that does a couple good things. One, it keeps affordability down so you don't have to pay more for that next house, and it opens up your house that you have that doesn't fit your needs to people who need it.
Okay. So the first one helps first-time home buyers. Yep. And the second one gets you from the house you don't need to the one you want now.
Yeah. Now the problem with that is, I mean, I hope they pull it off, but I don't know how they're going to, because when you get a loan, that 2.5% loan, that's tied to a fixed address. Right? So that lender has to be okay, even if it's legal, they have to be okay with you picking that up and dropping on their house. And I don't know that they're going to, because I don't think those lenders, they don't want these 2.5% loans. They want you to sell your house. They want you to pay it off. They want the hundreds of thousands of dollars so they can loan it out tomorrow to someone else at 6.
Right.
But I hope they can make it work.
Okay, how about the changes in FICO scores?
Okay, so starting today, there's always been, for conventional loans, just your normal, Fannie Freddie loans, a minimum FICO score. In order for your file to even go into underwriting, you have to have had at least a 620 FICO score. Okay. As of today, that's going away. Again, people screaming and crying, saying it's awful. It's not a big deal. All right, VA, FHA haven't had this rule forever. And all it does is it allows your package to be put into underwriting. It doesn't mean you're going to get a loan. It just allows your package to be put into underwriting. Okay, great. The bigger issue, which is very exciting, is they're talking about potentially scrapping the FICO system as the means for determining somebody's credit worthiness. And they're looking at going to one of 2 different programs, either Vantage 4.0 or FICO 10T. I have no idea why they call it that. That I couldn't figure out. Look, I don't know what this means. But the advantage of those 2 things is they're going to look more, they're going to focus more, put a heavier weight on the last 24 months. Right? And they're going to include your rental history. FICO doesn't include your rental history. right? FICO goes back many, many years, and the problem with FICO is that disputed Verizon bill that you say isn't yours is still showing up on your FICO score and helping or stopping you from buying a house today. The Vantage and the FICO 10T, they're not going to look at that so much. They're going to look at your last 24-month history and include your rental history, and that would be the means of the new credit rating system. So I'm very excited about all three of these things.
Yeah.
I mean, the shortage of houses is the fundamental problem. We're somewhere between 6 and 10 million structures short in the United States. That's not going to get fixed. So these three programs can actually make things a lot better in the short term. So I'm very excited. I hope we can pull all three of them off.
All right, Jim Bottrell, the Bottrell Real Estate Group. Always good, man. Always learn stuff from you.
It's awesome being here. Thank you.
If you enjoyed this video and you want to watch more videos like it, be sure to like and subscribe so you can stay up to date in the latest real estate trends and developments. I'm Jim Bottrell, the Jim Bottrell Real Estate Team. I'll see you next time.